Welcome to the Startup Funding Espresso. I'm Halti Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Halti Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Venture capital funds use different payback structures. Each varies the structure for how the limited partners receive their returns. The European Waterfall model does not pay back the carried interest to the general partners until the limited partners have received all their capital and return. The American Waterfall model pays the general partners on a deal-by-deal basis. This spreads the risk over several deals and throughout the life of the fund. The American model works at the deal level. The European model works at the fund level. The American model gives equal precedence to the managers as the investors. The European model gives precedence to the investors. Other factors to consider include the carry rate and the management fee. In raising a fund, consider the payback structure to the investors. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.